Okay, hey guys, talk about my favorite topic, and that is how to convert this into a plan of avoiding it. So identify what it is and then create your plan to avoid the noise. There's just no way to get around. You don't want to trade a 1 minute chart because of the noise. You want to understand what the market is doing and then get a better view of how to approach a plan to enter a trade area. I use momentum, I use volatility, and I use higher time frame trend. So this is the momentum and volatility, and I will give you the higher time frame trend in just a second. And I use the NinjaTrader Market Analyzer to do that. Start a new one. And I don't have data today. It's Sunday, but I thought I would turn off the noise on the television and show you the higher time frame trend concept. So when I get momentum, volatility, and higher time frame trend all working together, that's when I want to be in the market trading. And hopefully also around, here's the momentum. Let me show you another thing that I look at consistently. My number 2 book on my Kindle is how the markets react to events. And we have an economic calendar. I have it on my website. So if you come to my website, you will be able to access the economic calendar and look at the week events. I have it set to Central Chicago time, but you can change your time zone. You can change the date and look for any period, past or present. So if you want to look at the prior Friday's numbers, just set it on prior Friday and you will, this box, there it goes. You can search for what happened on January 12th and look at the numbers that came out, how the markets reacted to it. So like if you see a movement, say in the yen or the euro or whatever instrument you're trading, stocks, forex, whatever, you can often determine that the trade opportunities are aligned to economic indicators as they're released, and you have 3 stars, 2 stars, 1 star. It just means the market is going to be moving. So we've had a lot lately with the political stuff that has affected the market, obviously, and the Federal Reserve, um, whether they're pushing the dollar up or down, whether they want the interest rates to be flat or start rising gradually. How they signal that information to the market with their meetings and their report releases greatly impacts the market. But you can just have someone start jawboning, get in front of a microphone, which often happens, and the market can just take off. So you always have to be aware of what's on, the calendar, and then you can get a trade plan. So go ahead and set your clock to 3:30 in the morning, like I do. Get up and hit that pound when that 3-star report's coming out, because trust me, that's when you want to be trading the pound. Likewise, the dollar on these larger events, jobless claims, good one. Anything that affects interest rates, consumption. Our economy is what, 70, it used to be 70 or 80% consumption. That's probably dropped given the flatlined economy. The growth was an anemic. We had a negative GDP at one point, not too long ago. Not too long ago, we were getting negative GDP numbers. So things are turning around. They always say catch a trend in its early stages. So we don't know if that's going to be up or down, but anytime you have a big change, the way that they're proposing to maybe adjust interest rates and adjust taxes, allowing less taxes for the corporation so that they can bring their money and manufacturing plants back on shore. So that's going to change, that's going to provide money for consumption that will, that will be your trickle down economic indicator. Then you'll start seeing the automobiles being sold and the people eating out in restaurants and yada, yada, yada. Um, so I think it's going to, keep all that in mind. You might get a dip first before you get that turnaround. I like the Wall Street Journal Guide to the 50 Economic Indicators that really matter. It really helps you focus on how the markets in past, history, you can't say it's going to happen tomorrow, but they can tell you that if you get a good, number on the home sales, what it's going to mean to the market, if it's a strong indicator to trade, you know, um, how the markets have, adjusted in the past, and then absolutely come back to my website because you can pull those figures out when the number comes out. If you want to see how the Mexican peso's been reacting to this period, you can look at so much information. You can get a history of what has occurred in the past, and then you can just look at your chart, just download some data and look at your chart and see what it did on that day when that news report came out, and see if you can get an actionable trade plan and see how the markets reacted to it. But when I have my higher time frame trend, try to get a directional bias and it matches my momentum. So momentum is rate of change. You can see when price is going to change direction very easily on a higher time frame momentum oscillator. And that change often occurs leading the close. I mean, you can get positive close but have negative momentum, leading you into that retracement, taking your foot off the pedal on buying any more until the pedal starts taking off again. And that is your momentum on your charts. And I'm constantly looking. I want to be trading in the direction of momentum. Very easy concepts. So when I can get a section of time, and again, we're looking at past charts, but when you get a section of prints in the same direction matching your weekly daily, it makes it super simple to drop down on a lower time frame and buy those lows, right? Because if you're going up, you want it to be in the market on those dips, and look for timing to get back long with your momentum change. Wait for the momentum to change. Not everyone is going to change. Wait for your bar to change. See, this momentum changed here, but the bar did not. So you have to have everything together. So you get your momentum change, you wait for your bar direction. You're trading against the volatility though. So I like to be over here instead, trade in the direction of volatility with momentum change. Time your trades according to the higher weekly daily 60-15. But let me show you what it looks like on a Unirinco. They say that you want an 8-tick risk on the bonds. I guess an old floor trader told me that a long time ago, but it reduces that noise from that 1 minute chart, and then you can just come in and take your trades when they set up according to your short-term time frame. Uh, that 10-year note that I showed you on the higher time frame, weekly's going up. I need to stop marking these. I can't clear the flags off of the with a clear all. I've got to manually take them out. Okay, here's the weekly. Daily's coming down. You have that separation. So we're trading against the weekly. This could be a new trend down with the higher time frame. Daily, and the bonds had been, you know, ratcheted up so high for so long, it makes sense to get involved in a short down trade on the bonds, trade against that weekly. But see your divergence here, higher low, lower low in price, higher low in momentum, and it came up to where the volatility and rolled back over. So this is a great possible second entry short trend condition, and you just set up your chart to take short trades. If you want to see what it looks like, just on the trend, you can see that definitely do not want to be buying long in here. And so you can just set it up to either take the trend trades or take them all short. And you can make your bar size any size you want. You get less noise if you set a bar size up a little bit larger. If you, again, take it down to a one tick or one tick, two tick reversal, you're going to get more noise and you won't be able to sit in these trades for a longer period of time. But you get more trades intraday that way. So if you like to scalp, by all means, be aware that you can set these bars up to intraday trade them, but you get a lot more noise when you do that. So be watching for certain conditions. My rules are pretty easy. I want to be trading with volatility, with momentum, and with higher time frame trend. So when I can get all of those to align, I can get a trade plan. So here, the soybean meal was trading up. I don't think I have data for that. Likewise, the Nikkei was trading up. Let's look at gold. I think I have data for gold. Gold had been running up, the E-mini too, but it's run out of its range. I think it's rolling over. Crude was running up. So let's take a look at crude this past week, and we can take a look at the daily and weekly chart also. And I do not want a 1-2 tick chart on crude by any stretch of the imagination. And there's that long trend. Broke the volatility and it has been running up. Look how technical this is. Came to a prior high and rolled over. So to get in and out of that, you can use a 25-cent bar, 25 tick, I call it cents. Or you can break it down to a smaller increment, more manageable to get in and out of the trade itself. Once you've identified a direction, trade it in that direction. The bars are set up to take trades after the pullbacks. And you can participate several different ways, sitting out of the chop middle and just wait for the trend condition to resume. But again, all of this is premised on identifying a condition. Trade with the weekly daily when possible to maximize your opportunity. Looks like we're going to be testing this volatility level, 58. So buy dips, wait for the breakout, wait for that retest, take off. Be mindful of when momentum starts retracing. That doesn't mean that it's not going to go a little bit higher. It means that the foot's off the gas. It's still moving forward, but at a lower rate of change. So you'll get to understand and work with these momentum indicators a little bit more. So definitely wait for momentum to change is my motto. I mean, you can take any trade on a smaller one tick chart that you want. That's not going to really help you. What's going to help you is to wait for momentum to change and trade in that direction in the higher time frame. So higher time frame dailies green, wait for that 15-minute momentum to be green to get in before you even get in on the smaller time frame. And it's even better when you can trade with your volatility once that's flipped over. So that first breakout pullback in a new volatility is always my favorite sweetheart trade, no matter what time frame I'm using. So put a blue dot on it, red dot. That's my favorite spot. People tell you they're not going to tell you their setup. Well, hello, this is called a pullback. It's only one setup, and you can trade pullbacks in a trend or not. See, momentum is going up. Wait for that candle to turn around and then get in and it takes off. Works like a charm. So be careful of the markets. Look at your trading calendar. If you see this week shaping up to offer a lot of opportunities, let's go back and look to see what we have. We've got Draghi talking at 5:30 in the morning, which will give us some activity, something to trade early tomorrow morning. Canadian dollar might be impacted at 7:30 in the morning, and that's about it. So a light trade day on Monday. Tuesday, euro overnight is going to be moving, maybe the pound, but mainly the euro. And Red Book comes out. Manufacturing PMI at 8:45 and existing home sales. So 8:45 to 9 on Tuesday looks like the time period that you want to be engaging for a short-term directional momentum volatility intraday trading opportunity. After the market closes, the yen is going to get active. So you can really put these time periods on your calendar, make a note, put it on a post-it, get up at 3 o'clock in the morning on Wednesday and trade the euro. And then definitely wait, set your chart up like I'm trying to show you to only trade with momentum and volatility and take the trade when it goes in that direction. Understand what data series, 9 or 10 ticks and crude seems like a good intraday opportunity. They don't always work. You can get shaken out of a trade. You just have to do your probabilities, more winners than losers, and reach your forward trading curve. That's why if you're just starting to build your account and you're new at trading, you can get really strict with your requirements, and lean on this theory that if you are trading long vol and long momentum and long higher time frame trend, don't try to fade those highs. Just go long, right? So wait for those pullbacks and go long. It's not rocket science. You know, you don't have to be a genius to trade. So there you go. This is Julie. Sorry for the lecture. Sunday morning, just trying to keep the TV off. Y'all be good.